In this video, I am going to open your eyes to understand exactly why the market moves the way it moves. The market does not move because of those levels. The market moves because the big players have to settle some debt within the market, some deficits within the market. So I'm going to show you that on the computer screen right now and explain to you guys why the market moves from level to level. After this video, guys, I know your eyes are going to be opened and you'll never be the same again. You will never trade the same again after this video. I promise you guys. And I know that this video is going to be the lifeline that you've been looking for. You will understand exactly why the market moves the way it moves. So without wasting any more time, guys, let's go onto the charts and I'll show you what I mean. So guys, we are here on the computer screen. We are here on the AUD USD chart. Now, I know you may be asking, why are you looking at the AUD USD chart? You can use this on any time frame, okay? You can do this on any time frame, any currency pair. This applies to all. This same principle applies to all, okay? So why does the price of an item, for example, AUD USD, the pair, why does it move from point A, okay, to point B, to point C? Why does the market do this? All right, we're going to look at that in a moment. But first of all, let me explain to you what is happening with the volumes in the market, or volume in the market. All right, so as we all know, that in the market there are several participants or several players, big players, that contribute a very large percentage to how the market moves. And these large players are large banks, large investment banks, hedge funds, and many other investment companies. Okay, so this is the market share per day for the investment banks or the big players in the market. You can see here, these are the top 10 banks that are contributing the largest share in the financial trading, okay, in the Forex market. We have JP Morgan, which is an American bank, okay. Then we have UBS, which is a Swiss bank from Switzerland, okay, which is number 2 in volume, takes 8.3%. JP Morgan alone contributes 10.78% as of 2020. This data is of 2020, June 2020, okay? This, I'm using it for an illustration. Then the third is XTX markets. XTX is based in the UK. Then we have Deutsche Bank, which is based in Germany. Then we have Citibank in the US, HSBC, the UK. Then the rest of these, as you can see, their percentage here to the right, okay? These 10 banks or these 10 financial institutions contribute up to 63.66% of the market share in the foreign exchange market. So they contribute 63.66%, okay? 63% roughly. Okay, let's say 64% of the trading volume. Now, what is the trading volume in the market? Trading volume is about 7 trillion, okay? It's about $7 trillion per day. So we have 0.63 times 7 trillion, right? So we have $4.4 trillion. We get $4.4 trillion is what these 10 banks here control in the market directly, okay? 4.4 trillion. Now, these are not the only banks that are trading in the financial market. There are so many other thousands of banks. So if these 10 contribute 63% of the market share, it means the other banks contribute maybe another 30% combined. Then the remaining 10% is for the retail traders, which is you and me, okay? So I want you to understand this thing here, this volume that is being traded. So these 10 banks alone have the capacity to move price to where they want the price to go, okay? JP Morgan has the capacity to take a trade or a buy trade and produce a market movement based on the amount of volume that they can trade. They can trade in trillions of dollars or in billions of dollars a day, okay? So you should consider that when you're trading, and that is why I'm bringing this video. I want to show you exactly why the market is moving the way it moves. Now, let's go back over to the chart here. so that I can show you an illustration of how that is. Okay, so have you ever asked yourself a question? Have you ever stopped to ask yourself a question that why does the market, okay, have you ever asked yourself a question that why does the market stop at this point here? Why does it stop at this point? Okay, or why did the market stop here? Let me explain to you why the market stops here. Some of you will say the market stops here because it has to create demand or supply and all that. Now, that is not the way you're supposed to be thinking. Okay, I know many people on YouTube here have come up and shown you this, but that is not exactly why the market is stopping here. The market is stopping here because the large institutions are coming in to drive the price lower. Okay, this big candle here, you can say, some people will say, oh, this created a supply zone. Then they will draw a box here and they wait for price to come back to supply. Okay, you can see that they are wicked out. Most of the stop losses are taken out here. Now, why does the market stop here? I'm going to explain to you that clearly, and from today onwards, guys, you will understand exactly why the market stops here. Okay, so let me give you the illustration. The market is moving from here. Okay, market is going up from here, right? It's going up from here. Now, first of all, let's explain why the market stopped here and started going up. The market stopped here and started going up because there are points within this area here. Okay, let me show you. There are points within this area here where the banks have left a debt or unpaid orders or unfulfilled orders. Okay, now those unfulfilled orders have to be fulfilled before the price goes back and continues going down. So normally, to move or to change the market direction, we retail traders who contribute only maybe 10% of the market share, we don't have enough money to cause the market to move in our direction and change like this. Okay, but the banks, since they always are the ones who change price or who drive price lower, they always leave orders as they accelerate going down. Okay, for example, here, okay, they drove the price down quickly from this area, so they have to go and fill up some of the orders that were left behind here, okay, before they can continue pushing the price down. Because if they don't fill these orders here, they will be trading in a deficit. I hope you guys understand what I'm saying. They will be trading in a deficit, and it's not good to trade in a deficit. But to be more clear, I'm going to show you exactly how you can understand where the market direction could go. Let me explain to you this area first, then we can progress. Okay, so this area was created here as the market dropped down. Okay, the market dropped down, came back to that area, and then dropped off from there. Now, why does the market come back here? Some people will say it came back there because it left a supply zone there. Okay, some people will say that, but I would not like you to think like that. I want you to think like the institutions. Here, they spent a lot of money. You see this large candle? This large candle here is a lot of money in billions of dollars. This red candle here, to change price from this bullish move to this bearish move and continue bearish for some candles, this takes a lot of money to drive price down. Okay, so when this is costing the banks a lot of money to drive price down, yes, they will be making money going down here. They'll be taking profit as they are going down. But then this money that they spent up here, okay, the money that they spent driving price from here, changing that direction, that money has to be settled. I want you to understand this. It has to be settled. Okay, now as that money has to be settled, the banks have to stop the price from going too far from this area. Okay, you see this area here, as the price is going down like this, okay, they have to calculate and make sure the price does not go too far away from this area, because if it goes too far from this area, the deficit will become too big and the banks will start to make losses. So what the bank does is they move the price back up here not to supply. I know you guys will think it is supply. It's not supply. They will move price back there to settle this debt, okay, to settle that debt. Not from retail traders. They are not taking any stop losses here. They are settling the debts or fulfilling orders which are here, which they left behind here, or they are paying the debt which of the money that they spent driving price down to make this profit. Okay, so let me take this off and then I'll explain to you a bit further how this affects the market movement and how you can use this to your advantage when you're placing your trades. Now, as you can see here, when the market moves up here like this, okay, when the market goes up here, it comes and fills up the orders which were left behind here. Okay, when these orders are filled, or when this debt is paid, in fact, let me change this to unpaid debt. Okay, this line here is the unpaid debt. Okay, this purple line you're seeing is unpaid debt in the market, this one. So this unpaid debt, once it is paid here, then you can see that the banks start to drive now the price back down to settle another unpaid debt which they used to drive the price from here back up here. They also left some debt down here because they spent money to stop this price from dropping further. They stopped it here by spending a lot of money, buying massively to push back here to pay this debt at this purple line. So here, down here, there will be also another debt down here. Okay, this is also unpaid debt down here. Okay, so as they have paid this debt up here, what the banks do is they start now driving price lower with these big red candles, because this debt is settled by this movement here. So up here there are no more debts. Okay, so there is a debt now down here. Okay, you see down here there will be a debt down here. Okay, so that debt has to be paid. You can see the banks then now drive price back down to clear this debt, this unpaid debt here, okay, to the left. And once that debt is paid, what does the bank do? The bank starts to push price the opposite direction to settle this amount of money that was spent going down to this debt. So they have to recover some of that money. Okay, that's why the price reverses. After paying this debt, the price will move down a bit, then it starts going back up to settle some of these debts. Now you ask me a question, why didn't it go up to this purple line, to this unpaid debt? This debt was settled. Okay, this movement up here settled this debt here, so they don't need to go back there because there is no more debt up here. So it stops here because it just wants to clear some of the money that they used to drive the price down from this area with these big candles here. There is some money that was left there. Okay, so they have to settle that debt which is in that area, and then they continue going lower. Right now, let me show you something very fascinating. You can see here that as they drive this price, stop here and drive price lower, what happens? They leave another unpaid debt here. Okay, because they have to stop here after fulfilling orders near here. They have to stop here and then turn their price around. Remember, every time price is turned around, there is a big player turning that price around because of the volume that they can trade. Remember, when they trade those massive volumes, they are doing that with their own money. Big banks don't use leverage. They trade their own money. So they have to recover that money. That is what we call the unpaid debt. So here, they also leave unpaid debt. So in the future, they will have to come back and settle that money which they used to push the price down from there. Okay, so this debt is paid. However, here also they left a debt. You can see down here they left a debt, unpaid debt right here. Okay, let me show you. Let me just change that back. They left unpaid debt down here, which then they had to come back and pay. Okay, after they paid this debt, the price does not have any more significant debts to pay on top here. Okay, so they will drive the price in its original direction down until they have made enough profit. Now the price stops right here, creating another unpaid debt, because they have to drive price to go back up and pay this debt right here. I want you guys to see this. Okay, you see this debt, that debt has to be paid. Okay, there are also other small ones like this one here, small ones, creating those lower highs. Okay, those lower highs have debts on them which the banks have to fulfill. Then now you can see the market stops here because it has to go back up and fill these debts up here. It goes up, it fills those debts. See where it stops. I want you to know why the market stops where it stops. Okay, you see why it stopped here? Did it stop there because this is a resistance zone? No, it stopped here because the banks went back to this direction here. Let me show you. The banks went back to pay that debt right here. Okay, so don't think that they stopped there because that is a support or resistance area. No, they stopped there because they are clearing their debt. Right now, after they've settled those debts up, there are no more debts to this side, but there are debts which have been created here. Let me first clear these drawings. Now you can see that there are small debts. As the market is going up, it leaves this debt, it leaves this debt. There are small unpaid debts right here. Okay, so the market will always go back to fill up those debts. All right, those are unpaid debts, those purple zones or higher lows, what we call higher lows. They are unpaid debts in the market. So the market will always gravitate to clear those debts or loans, okay, that they used to drive the price up. I want you to understand this. When you understand this, guys, you will always trade in the correct direction. Now let's go to the front and see if these debts were settled. Okay, let's see if these debts were settled. As you can see now up here, this one settled this debt. Okay, so this one was used to settle this debt. So in front here there is no more debt to be settled because this was used to settle this debt. Okay, so you can see that all these small debts are settled, including this one here was also settled here. This lower one here is the one which is not yet settled. Okay, you can see this one is all settled, this one. Now when you go to the front here, you can see that there are some debts which are created here. Price goes down, creates a debt which is settled at the front. This one is not settled. Okay, so the price will have to settle this one, which settled this. You can see it goes back up to settle that debt before going down. Even here, this one was also settled. This debt here which was left here was also settled here. This one was also settled. So all these higher lows, higher highs, higher lows, higher highs, these are just positions where the markets are going to pay unpaid for debts, okay, or deficits within the market. Now some of you will say this is liquidity grab and all that, but that's not liquidity grab. There's no liquidity that's being grabbed there. The banks are simply moving price to those levels to clear their unsettled orders or clear their unsettled debts, which they used to stop the price and drive the price the opposite direction. Now, how do you use this to your advantage? How do you use this to your advantage? You use this to your advantage by understanding where the unpaid debt is currently. For example, on AUD USD, let me show you this. On AUD USD, let's first mark the charts with those unpaid debts. For AUD USD, the current market is here. Okay, so where is the unpaid debt right now for AUD USD? We see that the market has paid this debt. Okay, paid this debt here, and the market paid these debts here. These ones they are not demanded. The market has just paid this debt here. This one here was just cleared by the market. Now there is this debt here down, which is unpaid for. All right, so we can say this is the unpaid debt. So right now, as you can see, the market is driving to call and pay this debt. You will be surprised that AUD USD is going to drop. It is going to continue to drop, creating smaller levels as it drops like this. Unpaid debt as it drops down to clear this big debt, because this is a massive debt down here which the banks have to pay to fulfill, okay, before they can move the market either higher or lower. Because you can see this long wick here, this long wick is a lot of money. To stop the price here, the banks spent a lot of money to drive this price up. So they have to come and fill up that debt to pay that money to clear it, okay? Now, this wick here was also paying a debt here. You can see it was paying this debt right here, okay? So that wick was being used to pay a debt behind here, okay? But it also left a lot of money on the table which has to be fulfilled. So you can see now that the banks are driving AUD USD down to this area here to pay that debt, okay? But this time when they pay this debt, they will not have any more debts on top here apart from small zones that they can pay any other time. So here what they might do, they might push this price lower, okay? They might push this price lower after paying that debt. They might push it lower to make profit from all of their orders that they've been holding for a long time, and also to pay for this long-term debt here which they left behind here as they drove price from the past, this one, okay? So this is a massive debt that they've been holding for a very long time, even like how many years? This, like for 2 years, okay? So they have some orders that they have to fulfill here which they left on the table 2 years ago. So this price of AUD USD can drop massively to this level here. So keep that in mind. Guys, I don't want to make this video too long, but if you understand what I've shown you here, this is the secret of trading. It is the only thing that you need to understand to know where the market direction could be headed to. If you've watched this video up to this time, guys, please do give a like on the video, subscribe to the channel, and let us all benefit with this knowledge. Thank you, guys. If you have any questions, drop in the comment section down below. Share this video with your friends and on your social medias. I'll really be glad, and let us go. Thank you guys for watching. Until next time, peace and out.